Yeah, it's good to be here. Interesting circumstances for sure.
Yes. Okay. So I want to start out. I want to go into the backstory of what happened with FTX and Binance. But first, just out of curiosity, with all the craziness happening right now, especially on Twitter, as this news develops, summarize this for me in like a sentence or two. What's happening?
Yeah, so FTX, a large crypto exchange or crypto casino, as I like to call them, evidently had taken some pretty large directional bets, uh, potentially with user funds, and also had relied on the value of their own printed out of thin air token, FTT, which was, supposedly used kind of like the BNB coin at Binance for discounted trading fees.
Mhm.
But they actually had more than the circulating market cap of FTT on their balance sheet, um, which is something that's possible because there wasn't, it was 3 billion circulating and 8 billion total, and they had like 3.6 on their balance sheet. Anyway, once it became clear because of a leak that somebody sent Alameda's balance sheet over to Alameda's, the sort of partner
Mhm.
firm. It's a separate entity, but it's very unclear where the division is between the hedge fund. When people know your positions and they sniff out weakness and there's no one on the bid, there's no one that wants to buy this stuff essentially except for you. Like the only company that the price of FTT matters to is FTX and Alameda, and there's no natural demand for this stuff. So let's say that somebody ran an analysis saying, like, at trading volumes that assume like a mix of bull and bear markets, there might be something like $300 million of annual demand for FTT because of the discounted trading fees. And assuming a velocity of money of, call it like, let's say something tiny like 3x. So the same FTT token only gets spent 3 times a year. So that'd be like, you would need about $100 million of supply, but they had pumped this thing up to, over a $3 billion market cap and $8 billion fully diluted market cap. So, at minimum, the thing is 80x overvalued.
And you were sort of calling this out earlier, right? You were watching the price of the FTT token and letting people know, just as you have with previous companies.
Yeah, I mean, I've been poking at this, scam, bankster, fraud myth. That's what I like to call him. Sam Bankman-Fried myth. This whole mythology since the collapse of Celsius, and this whole BS around him being a white knight coming to save crypto. It always, yeah, well, such short memories we have. It was probably 10 days ago that Sam Bankman-Fried was talking about buying Coinbase. So you want to talk about hubris before the fall?
That's crazy. Yeah.
Yeah, I mean that might have been last week. That might have been Monday or Tuesday last week, but it definitely wasn't more than a week and a half ago. I mean, Coinbase doesn't have a token, right? So it's just an exchange, and it's doing what a casino operator should do if they're just, trying to make money. Like, you've got, just take your rake, call it a day, book the profits. Um, Binance, they say they're going to do proof of reserves.
Mhm.
I've never seen anything to indicate that Binance rehypothecates user funds and uses them for taking one-way directional bets or lending them out to market makers or whatever it is that FTX is doing.
Mhm.
It looks like the hole in the FTX balance sheet is $5 to $6 billion. That's the last I'm seeing on Twitter. That's what they're shopping for. They're trying to get it by noon Pacific. So they've got about 38 minutes as we talk right now to get $5 or $6 billion supposedly.
Wow.
Again, this is secondhand
I mean,
info that I'm
once the
gleaning
ship
from
is taking
Twitter.
on, yeah, once the ship is taking on that much water, what are you going to do? It's sinking. So,
Yeah. So as far as consolidation, yeah, I mean, are you gonna have Binance owning Voyager and BlockFi and FTX because those deals go through?
yeah.
And I think the simplest one was, I think, the headline tweet that ended up getting repeated everywhere, which was just, they had like 6 billion of retained equity or net equity essentially, and an FTT token pile at Alameda of 3.6 billion. And so the point was, the majority of the retained equity in this supposed genius prop trading shop is this printed out of thin air token from their sister company. And that
So
doesn't look very good. I think it looks really obvious by the fact that they even have this liquidity crisis. They've actually been using users' funds to do things, to trade, to lend out, to put in other places. And they thought they were so smart that they could manage the risk. So yeah, I think that deposits are at risk. And I think that's the whole point of them selling to Binance, is they're counting on Binance to come and make everybody whole.
what do you think
Uh,
happens to SBF with this whole process?
I mean, my main point in going after the guy for the last, what is it, November, I guess the last 5 months, 6 months, was just don't believe it. This guy is not an altruist. Like that whole ethos, sort of left coast 60s, 70s liberal ethos of, okay, if you're going to be in capitalism, just because you want to give it away, that was supposedly his thing. That doesn't mean you can screw people over and scam them to get the money. And I think that's what you see, like these guys that can make, great moves with lots of time to crunch the data and spend their time with it. You put the clock on them, you get in a dynamic market situation, all of a sudden the animal spirits are attacking you and everybody's hunting your positions because they know exactly which tokens you have, because they have your balance sheet. And they've also seen all the things that you've pumped and dumped in the past, like Solana and Maps and Serum and all these things. Like everybody knows the big one-way directional bets. So they just had to short each of those, and they would assume that other people would pile into the trade, and then it has its own momentum. And that's what I talk about when I talk about a Lehman moment. It's not Lehman, what happened to the rest of the banking industry. It's what happened to Lehman, and just the fact that people knew what was on their book, and they knew that Lehman would be forced to sell at a reduced price, and that you could just short the crap out of anything that they owned. So this happened to long-term capital management in 1998 as well, right? The correlation of all their products, everything that they owned and everything they had on their book goes to one, because people know their positions, or thinks that they know their positions. And I think that's just what happened with FTX. Like everybody said, oh, they're in trouble. I can make money shorting literally anything that they own.
Yeah. I mean, that's that crypto contagion effect with all the dominoes, and it can happen very quickly. People thought it was over. It's been a couple of months. Bitcoin's been holding up okay. We're still in this bear market, but people thought it was over. And now which one comes next? What do you think's the next one that's going to fall?
I mean, we know, again, this is kind of about who's fragile. And and that doesn't mean that they're going down for sure. It just means that their businesses are doomed to fail at some point, because it's just they're turkeys, and they think they're getting fatter and fatter and happier until Thanksgiving, and then they get their head chopped off. But other ridiculously fragile businesses out there include crypto.com. The chance of them actually